This is the only video you will ever need to watch if you want to properly use Fibonacci. My name is Nonchalant, and I'm addicted to day trading. It's your boy Nonchalant FX, aka Swing King, and we are back with another video on day trading. We're going to be talking about something that is extremely useful, and I use it almost every day. It's a part of my strategy. It's a part of a lot of people's strategy, and it's something called Fibonacci. All right, so Fibonacci. What is Fibonacci? How do we use Fibonacci? What is the purpose? All these things we're going to talk about in this video. Fibonacci is a part of my everyday strategy or my trading plan. Usually looking for pullbacks within the Fibonacci levels. And I'm going to show you what that means, because it can sound like gibberish if you don't know what it means. So first things first is you want to identify a trend. And as you notice, this is the basis of a lot of strategies. Identifying the trend. Which way is the market heading, guys? You need to know which way the market is heading in order to build a basis around that. So, for example, right here, we're on the 4-hour. And we are going to be looking right here. We're on AUD USD. You know, the slowest pair of them all. My favorite. And we're currently in a downtrend. And if you don't know how to identify trends or draw a trend line, I have a video speaking about trend lines and drawing your trend lines. Go and watch that. I'll link it in the description. But how do you use Fibonacci once we identify a trend? So right now we have a clear downtrend. All right, we're in a downtrend. Now, the first thing is you want to have a break of structure. What do you mean by a break of structure, Shah? Well, if we're in a downtrend and we're making lows, lower high, low, lower high, you want to break your lower highs. You want to make a new lower low. You want to make a new low before you're able to use your Fibonacci tool. So right here, you can see we broke this low. We created a new low. So this moment in time, I would be looking for a Fibonacci retracement. And what that means is we're taking the Fibonacci tool. You go from the previous high, you extend to the current low. And that's how you draw it. It's pretty simple. I'll repeat again. So we are in a downtrend. We're in a downtrend. We have a high. We have a low. This is a swing low. So we have a swing high, swing low, swing high. The low is right here. Once we break this swing low and create a new swing low, which is what we're doing right here. This is now your new swing low. Now you're able to pull out your Fibonacci tool, draw from the previous high, which is here, the previous high, extend to the current low, which is right here, and that is how you draw your Fibonacci. Now, how do you use this? Okay, so there is typically when you have a retracement, which is a pullback or just correction in the market, there's many terms that people use for pullbacks, retracement, correction. All it is a price pulling back. Because the market cannot go down or up in one direction forever. It can't just go straight up, not stop. It can't just go straight down, not stop. It has to pull back. It has to correct, then continue. Correct, continue. Correct, continue. So here we have a correction. Boom, right here is the correction. Now, what you're looking for with the Fibonacci is a pullback to one of your levels. One of your levels that are marked right here. So as you can see, I have, if you're using the default Fibonacci, you're not going to have the 70, the 78, or the 88, or the 113, the negative 113, the 23. I don't know if the 23 is there. I can't remember. Or you're not going to have the 27, the 27. So what you want to do is copy this, pretty much. Just copy this. This is the settings that I use. You don't have to use them, but I find a lot of success with using these levels. So go ahead and copy these levels, get them down. Let's get back to it. So you're looking for a pullback to any of these levels, guys. Any of these levels here. You want it to pull back in between any of these levels, guys. Any of them. Your most popular would be 50, 61, 78, 88, the 30. Well, I typically do not like the 38 because I just feel like it's a weak pullback, but it gets used a lot. But I personally don't really trade off of the 38. So yeah, but the 38 is another common level. So just heed that warning, I guess. But yeah, those are your typical levels. You're looking for a pullback to these levels. So as you can see, it hits the 38, almost pulls back and touches the 50. Oh no, it does actually right here. It touches the 50. And that is where you take your position as a continuation. So the goal is pull back, enter on a sell here in this area, because you can see when market comes here, what happens? You can even draw a zone in this area right here. You see, you get your first rejection, your second rejection. Okay, now I'm gonna whip out my fib because I'm like, okay, I see structure forming here. Price is having a hard time breaking through. You know, look at this. As you draw your zone out, look what happens. Price has a hard time breaking through this level. So this shows me that, okay, price is done retracing. Price is done correcting. It is done pulling back. It is ready to continue in the sell direction, which is where it's heading. So you get your impulse, you get your rejection, your impulse, you get your retracement to the 38, to the 50. These are all sell opportunities. So what you would do is you would take a sell on these levels. So you get your boom, you can go like this, or you can just extend it out. Now, in this incident, you're placing your stop above that level, because if it goes past this level, you're going to look for other retracement zones, which would be your 50, your 61, your 70, and so on and so forth. So right now we have the 30 to the 50. It looks good. It doesn't want to break past this resistance. So we're going to sell here. And as you see, we sell here. Target your first TP is always the 0. Always 0. You always want to take it to the previous low. Always want to take it to the previous low or the previous high, depending on which direction we're going. But you always want to take it to the previous level. And that would be right here. Got that marked right here, right on your 0. That would be my first TP. My second one is the 27. The 27. And as you can see, TP1 was hit, TP2 was hit. You left with a 1 to 4, almost 1 to 5 risk to reward. It was a small stop loss, about 28 pips, 30 pips, to catch 136 pips. That is Fibonacci, guys. Shows up every single day without fail. It is part of my strategy. I love Fibonacci. I absolutely love Fibonacci. Absolutely love Fibonacci. I'm going to show you guys another example, but we're going to do it for the buys. Oh, Lord. So, what's the first thing we do, guys? Identify the direction that the market is heading. So, right here, still in the 4 hour, we can see. I'm going to show you guys where we're at. We're right here. Boom, boom, boom. You can see that we're in an uptrend. Okay, we can see that we are in an uptrend. So what I'm going to do is identify my highs and lows just to make it easier for myself. Got a high, got a low swing high. Boom, boom. Right here is where, oops, let me redraw that. Right here is where the price breaks, right? So what do we do now? Okay, I am able to pull out my Fibonacci and draw it from the, well, since we're in the uptrend, it's from the low to the high. From the low to the high, right? From the low to the high. And as you can see, just like I said before, you're looking for a pullback, a retracement. You're looking for a correction back to your Fibonacci levels, your 38, your 50, 61, 70, so on and so forth. And what happens? We get a pullback to what level? The 50. Nice tap on the 50. As you can see, it's a very nice tap on the 50. Let me draw my zone. Boom. Right here on the 50 and on the 38. So you got a 50, 38 level. Just like before, what do? You pull out your risk to reward tool. You enter inside of this zone. Your TP, your stop loss is right under the zone, just in case price wants to continue going down and test other levels. Make structure. You're looking for structure to form. You want structure to form before. You don't want to just jump in the trade because it hits your 50, because it hits your 61. You can't take aggressive entries, but you want to look for structure to form at those levels. You want a double top. You want a triple bottom. You want a head and shoulders pattern. You want, forming structure at the levels. Look for structure to form at the levels before you take your buy or your sell. So here you have a double top, double bottom form. Where's the double bottom? Boom, boom. Right there, you double bottom formed on this 38.50 level. So what do? We enter there for a buy. And where's your first TP, guys? Your first TP is always the 0. You just want to go to the high. You just want to go to the previous high, which is right here. It hits that. Okay. Now you want to target the 27. And as you can see, the 27 was hit. And you can extend it. This is right there. Good. Boom. 27 was hit for a risk reward of 1 to 6, guys. 1 to 6. And this is a trade I would have caught. This is a typical trade that I catch. About 1 to 5, 1 to 6. For 129 pips. 20 pip stop loss. Yeah, man. It's Fibonacci, guys. It's it's extremely useful. Combined with other confluences. Using Fibonacci, you will increase your odds exponentially. I promise. Your take profits and your stops, they're going to be tight. Your take profits are going to be far. They're going to be nice and whoa. I was about to say. They're going to be good take profits. A lot of pips you guys can catch with Fibonacci. Of course, if you're using the higher time frames. But that's pretty much it, guys. Go out, back test, practice this because it is extremely useful. Catch you guys in the next video.